all of our viewers who must have heard the rumors, the buzz around newspapers saying that they are not safe. But let me put a caveat, let me give you an alert that is given out in the Economic Times that the newspapers are indeed safe. There is no scientific proof, and it is totally irrational to think that the newspapers are not safe. The presses, they all follow the hygienic protocol, including the delivery as well as the vendors for the newspapers. They all follow the safety measures, so there's nothing for you to worry about when it comes to your newspaper. So go ahead and go and contact your delivery agent or your vendor to get your copy of the Economic Times, or else you can log on to www.wantmypaper.com to get your share of Economic Times and the Times of India right away. But let me take you through the top headlines as they're on the papers this morning, and here you go. The top headline on the Economic Times, that is the commentary coming in from the Chief Economic Advisor, K.V. Subramaniam, saying that there is no free lunch. That's the word coming in from the Chief Economic Advisor, saying we cannot imitate other countries on the relief package. But what are the other headlines? You have the Arogya data. Surrounding that, you have the IT Minister Ravi Shankar Prasad saying that the Arogya data is safe and it will be used only for limited period. Cash-strapped states rush to raise the taxes on alcohol. You had Delhi as well as Andhra Pradesh who did that yesterday. And no liquor sale in Mumbai from today. You had the BMC give out that circular late last night saying that non-essential shops will be shut in Mumbai, including liquor, as the norms were not followed by people who were queuing outside the liquor stores. And you have SEBI that has rejected the proposal on easing of the QIP pricing norm. So these are top 5 headlines that's there on the Economic Times this morning. Over to you, Varun, for the rest 5.
Right, Cheryl. Good morning. So, Mumbai is staring at a shortage of doctors, health officials and professionals. So this is a story we'll be developing later, but it's in the paper this morning. Also the task force updates. The PM says 30 plus vaccines are in the works, so that's quite important. Also the guidelines out for companies willing to work with 33% staff. So some rules and framework coming in to how these corporates are supposed to operate. Next, export SOP is likely to continue till March 2021. So that's quite self-explanatory. And last but not least, the jobless rate hits an all-time high of 27.1%.
All right, those are the top headlines that's there on the Economic Times. But let's just focus to the ET markets page and get you the top headlines that's there on this particular page. You first up, you have RBI that's clearing the fog on the special provisioning. Apart from that, you have a story on the markets where Sensex gave up gains. In yesterday's trading session, you saw how the trading panned out. It ended lower by about 262 points. You have cooperative banks that will now come under Sarfazi Act. That's the word coming in from Supreme Court on the cooperative banks. You have government that's aiming to raise about 22,000 crores from ITC as well as Access stake sale. That's a big story that's coming in the ET marketplace page, which is saying that the government plans to exit both the companies via bulk deal on bourses by early next week. And apart from that, the last story on the ET market page that's of importance is Bank of America Securities has downgraded SBI, ICICI Bank, IndusInd Bank as well as Bank of Baroda.
Thanks for that, Cheryl. Another story that also made it to the front page, a little lower down though, is the fact that from FMCG to apparels, you're going to see a comeback in discounts very soon. So that's what they're going to do to try and reinvigorate the sales. Moving forward, hotels, restaurants seek nods to sell liquor. So the current liquor stock that they have on hand, they would like to at least be able to dispose of that. Next, KKR, Carlyle, PAG, Apex, they're closing in on their deal with JD Chem and maybe valuing that company as much as 5,000 crore. And moving forward, tourism and hospitality sector faces a 10 lakh crore risk. So possibly one of the worst hit sectors by the COVID. And finally, Jio platform may offload another 8% stake to other investors. This is all source-based, nothing confirmed yet. To just get you a little overview of what's happened today as far as what the CEA said, which Cheryl brought up earlier, our chief economic advisor talks about the issues with stimulus. He talks about how it's basically very costly for the government. He makes a reference to the Spanish flu, which happened way back ago, where he said there was a V-shaped recovery, and he actually expects a V-shaped recovery here as well. So some people are saying India's GDP can be less than 0.5 to 1%. He thinks it's going to be 2% by the end of the fiscal year, although the near term may be bad. All this, just to keep context for you, remember, unemployment rates have shot up to 27.1%, so you have to factor that into the dire need for stimulus as well. So that's a front page story of the Economic Times today, quite important, please do take a look, and quite a key development.
Right, that's an exclusive interview that's there on the Economic Times on the front page, but there is another very distressing news that's there on the page 2 of Economic Times, and that is the Mumbai Navy staring at a huge shortage, I beg your pardon, shortage of doctors and health professionals. It is quite concerning, quite distressing news to read. You have ICU care facilities of almost all city hospitals that are getting exhausted. So it looks like tough time coming in for Mumbai when it comes to battling it with coronavirus. Remember, BMP also shut yesterday the liquor stores because people were not maintaining social distancing norms. You had people all across the road, the swamp of people. So definitely a cause of concern. The story goes on to say that a few COVID-19 patients were forced to wait on roads overnight before the administrations could actually make arrangements. There you go. That is one of the top stories on page 2 of Economic Times. But to talk more on this, we're joined by my colleague Utkarsh. Utkarsh, very concerning news when it comes to Mumbai. The fact that there is shortage of doctors and health professionals anywhere in the world is a cause of concern.
Exactly, Sheryl. And you would have gotten a sense of this by just by the fact that the government at this point of time is now looking to make a makeshift hospital in BMC. The work has started. In the next 2 weeks, BMC will be up and ready with this makeshift hospital. But I'll give you a sense of what is the current status. As the story speaks, all the private hospitals, all the beds are occupied. There are only very few beds at this point of time in the government hospitals which are there, which are available. And as the story goes ahead and says that one is obviously getting the beds. Now it's the NSCI center in Mumbai. It is all the other places which are now being taken for quarantine facilities. We've been hearing about Brabant Stadium, which is a cricket stadium. It's also being getting ready to get the COVID patients. But the problem is that the nurses and the healthcare workers, that's a bigger shortage at this point of time. At least 500 people short at this point of time in Mumbai. The bigger problem, Sheryl, is not about how we look at today. Look at the numbers. Yesterday itself, over 500 people were tested positive in Mumbai and 1,500 in Maharashtra. And the curve is not flattening at all when it comes especially Mumbai and Pune. And that is the biggest worry for the government at the time. And that is precisely the reason why the liquor shops were not allowed to function by BMC. The moment the numbers came out yesterday, it was a huge spike. We're speaking about more than 500 numbers in Mumbai, more than 1,500 numbers in the city, in the state itself, and that is a worrying sign of where are we headed. And after opening up the economy, after opening up a lot of non-essential services, the government decided, especially in Mumbai, they will not go ahead with these services, and only the groceries and the medical shops will be open in areas.
All right, and in another very interesting development, Utkarsh, please do stick on with us because we need your take on this. The liquor stores, as you know, were open for 2 days. There's been a reversal in the decision, rather a very swift reversal. And we've all seen footage of the huge lines outside the liquor stores and even in some cases, very severe lapse of the social distancing norms. People at these stores are way too eager to get their supply. They're not following the rules. So obviously, this could have also led in some degree to a heightened risk in terms of the virus spreading. But Utkarsh is going to join in now again with all the details regarding this story. Over to you, Utkarsh.
I guess we've lost that line with Utkarsh, but he actually touched upon a bit on the BMC actually going ahead and giving that order to shut down the non-essential stores due to safety measures not being followed. But those are the top big headlines coming in from the city itself. One, that the Mumbai is going to face a shortage of doctors and health professionals. Yes, and the numbers are rising, and it is a cause of concern. So it is up to all of us to actually stay safe, stay at home, and make things easier for us also. But let's move on to another top story that's there on the front page of the Economic Times. And that is SEBI has rejected the proposal on easing of the QIP pricing norm. There you go on your screen. Also, you have that particular story. Regulators feel that the share price is already at low levels and demand for more discounts are not justified. So that's a big headline that's coming on Economic Times this morning. But to talk more on this, what this particular means, we have my colleague Ajay joining us right now. Ajay, take us through this story. It's quite an important one that the SEBI has rejected the proposal of easing of QIP pricing norms.
Well, that's correct. The entire investment banking community, along with investors, had approached SEBI lately that the times are very difficult and they should be allowed to give a 10% kind of a discount when planning a large QIP compared to the 5% which is ongoing right now. That was their proposal, but it has been rejected. It is important to note that right now, because of massive liquidity crunch, not a very large portion of corporates are unable to raise money, so they are going ahead selling family silver, cutting stake in their company, offering it to institutions and private equity players so that they can shore up their balance sheet right now to tide over this difficult couple of quarters. So companies are preparing for difficult quarters going ahead, and as a part of their preparation, they need to sell stakes to raise up capital. So as part of overall plan, several QIP proposals are coming to bankers, but there was hardly any demand at 3, 4, 5% lower, because any day the market falls 5% and the stock is available 5% lower. So why would any investor come in? Right now, investors are looking at bargains. And for this, they had approached SEBI that at least they should be allowed to give up to 10% discount from the 2-week average price. But SEBI has rejected. In their mind, they feel that prices are already so low, so there's no case for relaxing the norms further. So let's see how it goes. It will be difficult for a lot of proposals in front of investment banks, and a lot of corporates will find it difficult, relatively difficult to raise money via QIP now.
Right, Ajay, thanks for bringing us a very interesting story. We'll definitely be keeping an eye out for all the various QIPs that we might expect in the near future. With that being said, everywhere you look, the taxes are being increased on alcohol. Yesterday, they raised the excise and petrol. It just seems that the consumer ultimately has to keep paying for everything. But in what is quite a relief, it seems that two places, FMCG and apparel, are actually looking at discounts to bring the consumers back into the playing foray. My colleague Vinny is now joining in with more details on this story. Over to you, Vinny.
Consumers across categories and e-commerce companies are looking to give attractive offers to fight the poor consumer sentiment which is there post-COVID. Now, FMCG companies, grocers, apparels, retailers, everyone is looking to give a discount to make a big comeback. During COVID and post the lockdown, that is after March, we saw a dip in the demand for most of these companies, and only essentials was what was working. So now companies like Amazon, Flipkart, Paytm, which are e-commerce companies, are also planning to come out with an 80 to 85% discount to attract customers to buy other products as well. While apparel retailers and brands are preparing for sale right after the market opens up. So as soon as the markets open up, where shops and malls open up, they will be looking to give very good discounts and clearing up their inventory as well. Now, if you go to see SPPL, which is a manufacturer of online-focused television brands like Kodak and Thompson, also said that brands need to clear their inventory, so they will have to give these discounts also because consumer sentiment is very weak at this point. Moving on to urban fashion, he also said that they will be giving good discounts and to attract customers, which is attract customers. Lastly, Select City Walk also said that they will be opening up with offers as soon as the markets normalize. So let's see actually how these works out for companies.
All right, thank you, Vinny, for joining us and giving us that big story that's there on the Economic Times on the front page, that FMCG apparel stores may come back with the discounts giving in order to fight the poor buying sentiment. But let me take you through the stocks that will be in focus and the stocks that are there in the Economic Times, the stories that's based on the Economic Times. First up, like I mentioned earlier also, ITC as well as Axis Bank will be in focus. As per Economic Times, the government aims to raise about 22,000 crores from ITC as well as Axis Bank stake sale. To dwell in more, they said that they will go ahead and with the stake sale on the bourses next week. The government plans to offload the entire stake in both the companies, and this is source-based story coming in on the Economic Times. So one of the key stocks to watch out for. Apart from that, you have stories on page number 4. One is the KKR, Carlyle, PAG, Apex, all closing on for JB Chemicals. You have 4 PEs non-binding bids that value JB Chemicals at 5,000 crore rupees, which is 9% premium to its market cap. So that is one of the top stories, and the stock to watch out for is JB Chemicals this morning. Next up, we have Jio Platforms that is actually planning to offload 8% more stake in the company. This will reduce the onus on IPO. It allows also it to buy 5G spectrum and improve the balance sheet. So this is also another top story to watch out for. Reliance Industries is the stock to watch out for on back of that news. Apart from that, you have SBI Life that came out with its earnings yesterday, a good set of numbers. The profit was up about 18%. Need to see how the stock reacts today post the brokerage reports also coming in. And next is Reliance Industries once again. They're planning to buy e-pharmacy NetMeds. Remember, one of the biggest sectors that, one of the biggest industry, actually most of them are saying that will benefit because of this COVID-19 is online pharmacy. So there you go, Reliance Industry is planning to buy e-pharmacy NetMeds. That's the story. And those are stocks to watch out for as per Economic Times this morning, Varun.
All right, Cheryl, thanks for that. And let's quickly get you an update of what's happening with the coronavirus. Especially here in Mumbai and Maharashtra, it's really starting to resemble the sharp surge that we saw in New York out of nowhere. Yesterday, overall countrywide, the cases have also inched up significantly at 3,900 with around 200 deaths. So the numbers really now getting to alarming rates. Takes our total to somewhere around 60,000. Mumbai shuts the liquor shops after 2 days of record sales that we already told you about. Maharashtra reaches 15,000 from 10,000 in just 5 days. So that's very key, The doubling rate is coming down. Karnataka at the same time has frozen the migrant trains. So they have a very different outlook as far as migrant transportation is concerned. And Telangana, which has been more foremost in extending lockdown, has extended their lockdown to the 29th of May.
All right, and those are the top headlines coming in from Times of India on coronavirus. But let's move ahead with another top story that is there on the Economic Times, and definitely use as well as Times of India, where you'll find everywhere is that the central government has hiked the excise duty on petrol as well as diesel. A steep hike coming in on that front. It is 10 rupees on petrol and 13 rupees on diesel. That is the top story that's there on the Times of India. Also, you see it on the Economic Times. So what does this basically mean and why is the government doing this? We have Ruchi Bhatia who's joining us this morning. Ruchi, good morning. Please take us through the entire rationale for this excise duty hike. Definitely, it is the need of the hour.
It's a major development coming in. In fact, in a late night notification put out by Finance Ministry, the government has said that they will be hiking excise duty or on petrol by 10 rupees and on diesel by 13 rupees. If you look at the breakup, road and infra cess on both petrol and diesel has been hiked by 8 rupees per litre, and special additional excise duty on petrol has been hiked by 2 rupees and per litre, and diesel by 5 rupees per litre. We're given to understand that this move is coming in by the central government at a time like this when the revenues have been very muted, and add to that the government's disinvestment program has not really picked up steam, gathered steam at all. So the government is looking to use this money to fill up its own coffers. Of course, bad news coming in for consumers, because they were hoping that due to the fall in global crude oil prices, in effect some sort of a benefit will be passed on to the consumers. However, this will not happen. Remember, the OMCs did not pass on the low crude oil price benefit to consumers. However, in effect, due to the current hike in excise duties that we've seen that the government has gone ahead with, this money will now be passed on to the central government and will be used to fill their own coffers, their own kitty. So all in all, consumers at the pump level will continue to pay the same price. No additional benefit coming in for consumers due to the low crude oil prices.
All right, and with that, we're completely out of time here on this edition of the Newspaper Show with me and Cheryl. Thank you so much for tuning in. Before we let you go, please listen in now to a very special segment on Impaired News.
Hello and welcome to this edition of News for the Hearing Impaired. I'm Rukma and with me is Sonu.